For first-time homebuyers, if it's possible, I really believe you need a face-to-face because it's an interview, it's personal, it's confidential. You're nervous, you're overwhelmed. We can't always do that with technology, right? That's kind of the blessing and the curse. The good news is we can take all of the application online, uploading documents securely, and do that on the phone if they're not close by, but they still have to have that one-on-one to make sure we're meeting their goals and they're moving forward feeling confident. But ideally, it should be face-to-face if possible.
What will you do when your money works for you? Welcome to the Tech Girl Financial Podcast with your hosts, Victor and Kim Gaxiola. From the home office in California, here is Victor and Kim.
So I've known Janine for about 10 years now, a little more than 10 years, because we were both part of the Leadership Morgan Hill class of 2009. Still the best class ever. That's correct. And so we're so thrilled to have you here at the Tech Girl Financial Studio to join us to talk about what it means to buy a house and how you get it funded. So welcome to the show.
Thank you. So glad to be here.
It's good to have you.
So why don't we start with getting a little bit of background. Janine, just share with us, if you will, a little bit of your journey and what brought you to the work that you're doing today.
Oh, well, I have been in the business a long time, almost 40 years, but the background is varied in that for most of my mortgage career, I was on the operations side, and I had a wonderful mentor who allowed me to pretty much work in every aspect of the mortgage industry on the back end, which means the loan servicing side when you make your house payment, which is an unusual place to start, but it was very educational to understand, kind of begin with the end in mind philosophy, and then worked in secondary marketing and loan processing and underwriting and closing, just about every position you could on the operations side, and then ventured into the sales side, the loan origination side.
That's great. So, and now currently, what are you up to?
I am currently the branch manager and loan officer of Guild Mortgage in Morgan Hill, California.
Great. So I'm excited to have you here because you could tell us a little bit about what Guild specializes in.
Yes, I'm happy to do so. Well, we do every kind of home loan really known to man. We don't do commercial. It's strictly residential, and we do both purchase and refinances. So when I say every loan known to mankind, there are so many. And we, as employees of Guild, are also a broker. So what that means is we have the benefits of being a direct lender. We fund with our own money. And then if we need to go outside and broker to another company, we have that option as well. So we really can get any home loan that you might need. Internally, which is where we like to stay a lot, we do specialize in first-time home buyer, but that can be a small loan or it can be a jumbo loan for a first-time home buyer, especially here in Silicon Valley where loans aren't generally low.
I know. Well, that is one question we get a lot here is for a first-time home buyer, it's like, where do you begin? Because it seems so daunting.
It does seem overwhelming, and it's actually easier than you might think. It all starts with pre-qualification. My recommendation to anybody contemplating it is as far in advance as possible, get with a lender who you're comfortable with and fill out an application with no obligation and plan it out. How does your down payment look? What does your credit score look like? What is your employment situation? Do you meet the minimums necessary to do so? And if not, then a good lender will work with you sometimes 6 months to a year in getting you ready. And there's so much more than that, but it starts with pre-qualification.
I think that that's an important thing to recognize is the fact that there is a lot that someone can do prior to actually meeting with someone like yourself to start talking about the lending conversation, as opposed to it being like the last mile conversation. Because I think people will shop for homes sometimes before they even have the funding to buy the home. So, I mean, how do you go ahead and recognize, or what are the best practices in getting prepared to buy a home?
I'm glad you bring that up because that is the worst thing possible is to go shopping for a home and then go get your loan approval or your pre-qualification. And we do see that happen. If that is the case, then it's a fire drill. Because it still is in this area and in most parts of the country a seller's market. And so the sellers are expecting a short contract and the ability to close fast. Thus the reason why back it up and start far before you're ready to shop and get pre-qualified first and then even pre-approved. And there's a difference. Pre-qualified is when a lender just crunches the numbers. Based on what you say you make, we do run credit and we tell you you're pre-qualified for X amount. That can be very different than what you're actually approved for. So you want to actually get pre-approved before you contemplate buying a home.
So that's interesting because I don't think I've ever made the distinction between pre-qualified and
Pre-approved.
Pre-approved. Yeah.
Yeah. We like to educate people on that aspect because not many people know the difference. And pre-qualification is, you'll hear people say, "Oh, I can approve you within 24 hours." That's a pre-qualification. They're not validating any information. They probably don't have your pay stubs, your tax returns, or anything else that they really need to validate it. And so that when you gather those documents and we validate them, then it is a pre-approval. And that at that point, that's when we issue those pre-approval letters to the real estate agent so you're ready to go and make an offer. But what we offer, and most lenders do, is actually a full underwriting approval before you go shopping. So pre-qualification is based on the information you provided on your application. Pre-approval is we validated it. And then there's one step after that, which is submitting it to underwriting and getting it actually approved.
Mm-hmm.
Well, and then I would imagine that having that, then you just feel better prepared to do the shopping because you could look at, let's say, a search and say, I want to live in this community. What are the homes available in the community? And you know what you can get lent to. I mean, you know
Right.
what the amount is so that you won't look at a home that's beyond your lending means.
That's correct. And one of the first questions I ask, whether you're a first-time home buyer or not, is what is your payment comfort level? It doesn't necessarily mean because you're qualified for it that you want that monthly payment. So that's the driver too in not going out and shopping and finding that house that you just fell in love with, and then you find out that total payment's $8,000, and you're not comfortable with that.
Right. And that, I know that that's important. A lot of times people say, okay, we're going to get approved for one amount, but you hear them say, I don't want to be house poor. I still love to travel. I want to do all these other things. So how do I make sure that I'm actually not biting off more than I can chew?
Right. So once we receive the application and we say, okay, you're qualified up to X amount, then we say, well, let's talk about what your goals are. The goals are the most important part of the application process with your lender, which is, do you want to travel? Do you want to have disposable income? What is comfortable for you? And then we can back into it. So we'll run 2 or 3 scenarios with, here's the very maximum amount you qualify for. And usually people will go, oh, that's great to know, but I'm not comfortable with that. Can you run a couple of different scenarios? Many times we can do 2, 4, 6, or 8, depending on what they want to find out.
Right. And then I imagine also the uncertainty of property taxes.
Yes.
I know in my head, I was thinking, I've got to hurry up and buy because real estate prices are going to go up. And that just means a bigger property.
Correct.
Tax
yes.
bill.
Here in California, what we do is we estimate 1.25% times the sales price divided by 12. And that's a simple formula that we can teach people when they're looking at taking that sales price up. Because it's not just the loan amount that goes up, it is the property taxes and as well as the hazard insurance that goes up. That's commensurate with your loan amount. So all of those variables come into play when you're talking about what payment comfort level they really like, because it's the full principal, interest, taxes, and insurance, and sometimes homeowners association dues.
Right. I think that's a much more approachable way of doing it too, just from the standpoint that it's, and full disclosure, Janine helped us with our home purchase. And I think it's important when we looked at the price of the home or we knew what we were able to afford. That seemed like a daunting number. And it is, especially in California, especially in Silicon Valley or San Francisco, the home prices are just astronomical. And you sit there, how could I possibly own a home in this market? But then when you break it down and you take a look at saying, if you have money, let's say, to put down as a down payment, and then you see what the lending amount is, and then you break it down to what the monthly cost is total, it becomes a little bit more approachable, because now I can fit it into the formula of what my cash flow is and saying, okay, I know what I bring in, and this is going to be my overhead, and it's going to include the insurance, and it's going to include the property taxes and the payment and interest. This is doable. And that's what I think, when people come to talk to you, that's what they're trying to figure out. Is this doable? Can I own a home?
Yes, yeah, absolutely.
So taking it back to that first home buyer experience, can you share if there's any sort of programs or incentives for first-time home buyers, or people who might have owned a home a long time ago or divorced? Are there any special programs for them?
Absolutely. And as you guys mentioned, it can feel overwhelming, especially for a first-time home buyer in Silicon Valley. We probably have more down payment assistance and first-time home buyer programs than anywhere else in the country out of necessity, because you can't even saving a 3% or a 5% down payment can be really a difficult goal. So yes, we have a lot. Some are state bond programs, some are county or city programs, some are lender-specific programs, but there are a lot to choose from. And some of those programs require that you work with a preferred lender. You have to have the expertise for those programs in some cases.
So the programs are through the city and state then? Most of them?
Correct. So as an example, in California, one I'll throw out there is called CalHFA. That's an acronym for the California Housing Finance Authority. And they have deferred payment second loans, much like a student loan, where if you meet certain income limits and other qualification criteria, you can qualify for down payment assistance. And it literally can cover all of your down payment and most of your closing costs.
Wow.
Yeah. And there is a myth out there still that people have to save 20% for a down payment. That could not be further from the truth. Mm-hmm. Yeah. I mean, we do regularly what we call high balance, and there's different limits, conforming, high balance, and jumbo. But we do even jumbo with 5% down.
So what does that strategy look like? Play that out, because in my head I'm thinking, okay, I'm getting this assistance, but it's not for free. At some point I'm going to have to pay that back.
Correct. So in some cases the fees are higher, and in some cases there's an equity share component. There's always a payback. You're absolutely right. So what we do is we do an analysis for if they have a small down payment and if they can do it without down payment assistance, and what that rate and what those costs are versus if they need the assistance. Even with higher rates and higher fees, the consumer can generally find that they don't have any other way to get into that first home. And they know, especially in California, the equity rate of return is generally 4 to 5% per year. So we do that analysis to say, even though you're paying higher rates and fees for short term, the benefit is long term. And because, as I shared with you, I've been doing this for so long, I now have a 20-year history of doing those CalHFA loans as an example, to watch a buyer come in with a couple of $1,000s, get the down payment assistance in that case, and with deferred payments on the second and or the third, and then refinance and pay those off and have the equity with no other payback, and have the benefit of that equity growth that they wouldn't have had any other way. They didn't have a parent who could give them a gift. They would have had to probably save another 5 years. At that point, they would have maybe been out of the housing market because prices went up. So we do all of that analysis to say, is is it the right time for you to do this with this down payment assistance?
And so it's interesting that you said too that they can refinance later when they have the equity in the house, because I know I thought that the only way you could forget about that or, move on is just to sell the house and buy a new property if you were going to.
And that is not the case. All of the loans that we do and other lenders do for first-time home buyers do not have prepayment penalties. There's no risk any longer, like you used to hear about exotic mortgage products with things such as negative amortization. We don't do those. We don't put borrowers in unsafe loans, especially if they're a first-time home buyer. Mm-hmm. But it can still be complex, right? If you hear the term deferred payments right off the bat, they have to understand what that means. There's no payment for a fixed period of time, but eventually they're paying it back. And then we explain that to them, what that means. But it's very rare that you find a first-time home buyer who isn't helped in some way by a family member. And it's also cultural. We have a huge melting pot, especially in the Bay Area. So different cultures just normally merge their families. And so we are seeing a lot more of mom and dad helping, their son and their wife, his wife, and or gifting a large amount instead of an inheritance. So that has really changed the face of our lending rules, let's say in the last 5 years. And that is a direct result of the lack of affordability.
Right. So, and that just means you get more creative with how
right.
you buy a house. It may not be the traditional way you think of anymore, but get creative.
Right. And I feel like that's important to mention because maybe you weren't thinking along those lines, and that may be a possibility for somebody who's on the fence and doesn't think that they can qualify, because a family member may be able to help them, whether it's with additional income in a co-signing situation or a gift for a down payment. There's lots of different things we look at.
Yeah, and now more and more you're seeing it in a lot of us are in the sandwich generation. So you think, okay, well, am I buying this house just for my family, or am I buying this house for my family and my aging parents when they sometime need to come back into it? So
that's a big choice for the house they choose.
Right, and may make it a better opportunity to have the parents involved.
Yep, for a lot of reasons. Mm-hmm. Yeah.
Well, I think it's interesting because it almost brings it back to a more traditional, how it was even during agrarian roots where generations would all live under the same roof. But, what we're faced against, and we have aging parents as well, is to think about whether or not, in-law quarters or, even in the real estate world, they're building these homes with like one home and then a smaller, like a home junior for the aging parents.
Right.
And so that brings in part of the conversation. So this cohabitation,
Habitation.
Cohabitation is being a little bit more widespread.
Right, and even city and county regulations where we live are loosening up for the ADU, the accessory dwelling unit, that you can now build in your backyard. That the county didn't allow even a few years ago because of the homelessness problem as well as the affordability problem. Mm-hmm. So, it's changing the landscape for sure.
This is all such great information, Janine. Are there classes or anything for people that are, just kind of kicking their tires? They don't want to meet with somebody, but they do want to have more information.
Great question. For the programs that I mentioned earlier, the down payment assistance, first-time home buyer education is actually mandated. It's mandated by the agencies that lend the money to first-time home buyers, precisely so they are educated before they really go down the road. So there are agencies, there's federal and state agencies that provide 8-hour HUD-approved courses, and then there's lenders such as Guild that do their own first-time home buyer training, whether it be one-on-one or classroom style. But for any first-time home buyer, whether they choose a program that requires it or not, I recommend it.
It's interesting because you have to have the right, I think, frame of mind as well. Growing up, we lived in one house our whole lives. And so my thought was always buy that one house and live in it forever. But, here in the Bay Area, it's like,
That's very rare. And, my dad is still in the house I grew up in. So that is not unusual for our parents' generation. But I know I've owned multiple homes and have done the move up, which so many of us do now. We don't stay in the same home. For whatever reason, right?
Right.
So, and also investment opportunities. It's not just your own home that you live in. Many people find the ability to buy a second home or an investment property. And, we help with that as well.
So, Janine, you had mentioned that one of the myths is that people have to have, what is it, 20% down payment in order
Correct.
for them to afford a home. And given your experience working with a lot of first-time home buyers, what are some of the other myths and misconceptions that you hear from people after they go through the process and experience with you?
That you have to have a credit score in the 800s. People think you really need a high credit score. You do not. We can lend down to 580 on FHA loans, which is kind of shocking. I don't recommend it because everything today in lending is risk-based pricing. So if you have a low credit score, we can lend you, we can finance whatever you need, but you're going to pay a higher rate for a lower credit score. So one of the things we do when we're prepping people to buy is we pull that credit right away. We find out what it is and we find out if it needs to increase in order to lower the interest rate. And that is the number one driver of a better interest rate. When you see the commercials, everybody comes in and says, well, I heard it's, 3.5 on TV. Yeah, it's 3.5 if you've got an 850 FICO score or credit score. So you can absolutely get a loan if you're in the 5s or the 6s or the 7s. An 800 is not required.
So that's interesting because when you play that out over years with that interest rate and the
That's a
size of
big
loans
difference.
here,
Yeah,
that's
yeah.
very costly. Just get it.
Yeah, get your credit score up.
Yeah.
And also that the debt to income ratio is driven by your liabilities on your credit report, right? So it's not just the credit score, it's how many car payments do you have? Unfortunately, a lot of families have 2 car payments. That can take you right out of the buying game. So we'll work with people on the balance of what kind of debt to income ratio that works for them.
Mm-hmm. Now, when you say that, it's really interesting because in my head, I'm getting more detail oriented. Does that mean also, like, if you were to lease a car?
Yes.
Or okay,
Yeah.
so it's a lease.
It's all the consumer debt, the charge cards, the car loans, the student loans.
Okay, so
are
it's
what
everything.
It's everything. And even if you have student debt, which I feel for the kids coming out of college right now, they're leaving with a ton of student debt, and they may have deferred payments, but we still have to use a small percentage of their outstanding debt to qualify. So we can't just ignore it. And so that's something that is scary in today's society, is the amount of debt that they come out of college with.
Right, which is interesting because you hear that with the statistics on real estate and, how many younger millennials are not going into traditional home buying situations. And when you bring all of these things into consideration, it's not as easy as it used to be.
Right, but I started out by saying it's easier than you think because my job is to make it easy.
Right.
These are all components that make people feel overwhelmed. And Victor's question was, what's another myth? Well, that's another myth right there, is if you have student debt, you can't buy. Most likely you can, but we want to work with you to find that right balance.
Mm-hmm.
So, Janine, it's been a little over a decade since the financial crisis, and I know that the lending industry and the housing industry went through a significant number of changes. And so, based on your experience, could you provide some insights on how the industry and the business has evolved in the last 10 years since the crisis?
Yeah, it's been interesting to participate in it. 10 years ago, the main reason for the crisis was irresponsible lending and no controls, and what we called no-doc loans. And ultimately, all of those are gone. So now it's as if we came full circle. Since I've been in the business almost 40 years, when we started, it's exactly what we're doing now, which is take a complete application. We do have to document and then document and document again. I mean, it is a paper-intensive process, but I always explain the history of the mortgage crisis, and so they understand we're not doing it to irritate you. It feels invasive, but it's necessary to confirm that you qualify. So on one hand, you have to provide your tax returns and your pay stubs and things that maybe you didn't have to do 10 years ago, but we're in a much better position. So yeah, it's more regulation. It is different regulations. So as an example, there's a term called qualified mortgage that didn't exist 10 years ago. And we deal with what's called a qualified mortgage, or QM, when we get into jumbo lending. And so that is very different than below the jumbo loan amount, which in Silicon Valley is $726,525. If you go above that, you're in jumbo land, as we like to say, and it cannot be a very pleasant experience because it has a different set of rules. It's a qualified mortgage, so there's less paperwork if it's under that loan amount. And as an example of a guideline that didn't exist 10 years ago, if you go to get jumbo financing, you have a reserve requirement, and the reserve is. Let's say it says 6 months reserves. That means 6 months of your proposed new house payment has to be in the bank after you close. So that's something that the average consumer wouldn't think about. They think, I've saved my down payment, I'm ready to go, and I've got enough for closing costs. But in addition to that, you have to have reserves. Now, the reserves can be retirement if they're liquid. If it's something like a CalPERS account that a consumer does not have access, then we can't use those for reserves. So again, those are different issues that your mortgage lender would go over with you depending on what loan amount you're going for.
And we always say have 6 to 9 months of expenses.
Well,
on
as a
hand.
financial planner, of course you would say that.
Yeah, exactly. So
it is the right thing to do, but the reality is a first-time home buyer probably has 1 or 2, but they're not in the jumbo market, and that's just fine.
Right. And I think that's the frustrating thing for people to do is it's like, okay, from a financial foundation, you need to have this or money there for in case of you get laid off of a job or what have you. But then, that money is there and you want to just put that all to the down payment and then you have to start again at square one. And so a lot to think about in saving for both your emergency situation and for the home.
Yeah. I mean, just thinking about the normal everyday needs when you move, you might need a new refrigerator. You might need a washer and dryer. That's part of the home buying education that we walk the buyers through. We actually teach them how to budget. Some people don't know that. And so
do you have a formula in terms of like, what does that look like? You buy a home and is there some magic formula?
Well, we teach them the debt to income ratio formula. So in lending, we have 2 ratios, a top ratio and a bottom ratio. And the top ratio is simply your new proposed house payment divided into your gross income. The bottom ratio is your new proposed house payment plus all your consumer debt divided into your monthly gross income. So that's the formula right there. And then there's numbers that cannot exceed. So when we have them go through and do their own debt to income ratio, they can see how far they're off.
Okay. And then in terms of just a budget for in case my refrigerator goes out or my furnace goes out or anything like that. I mean, is there any...
There's not a magic formula. It depends on the loan type for what they require. Some loan types actually require a specific residual income or disposable income amount, money left over at the end of the month. Because when we do those ratios that I spoke of, they don't include things such as grocery and child care. It's truly just your consumer debt. So that's why generally that back ratio limit is 45% of your gross income. And the reason why it's 45, and sometimes we can go to 50, is you need the other 50% to pay for life, movies, groceries.
To have a life.
We don't, yeah.
sure do.
We don't take that into account. We
Right.
leave that up to you.
Right. I know here in the Bay Area, and for those that are self-employed or anything like that, it's like the insurance. How much do you need
Yeah.
for the mortgage, and the health insurance alone
Yes.
is like somebody's income in another state.
Right. And then those debt to income ratios that I spoke of, when you go into jumbos, they're more restrictive. So they can be limited to 38% or 43%, because, again, that's now a higher risk loan. So the rules get a little bit more stringent.
Right.
Well, what's bringing to light to me, just based on this conversation, is a couple things. But first, two things. Number one is just how nuanced, the industry is, and how similar, the financial services industry as it relates to helping people with investments and goal setting is to the work that you do in needing to make this assessment of their situation to determine, in the case of investments, what investments are appropriate, how much risk are they willing to take. And then on your end and on your world, it has more to do with what can they afford, and still be able to maintain a life,
Right. Yeah.
And so, looking at and bridging the two worlds and how important that is, that's the first insight, that I take away. The second insight is I'm so glad we worked with you, because you do need to work with a professional and someone who knows the business inside and out to help provide the kind of guidance and insights that are necessary for you to make the best decisions.
Well, it's like any other industry. The same thing with financial services. Having somebody that really does that assessment, or your trust attorney or your insurance agent, it should be that way with anything that affects your income or your investments.
Right. I know these are subjects that so many people hate to talk about. And so it's always on my mind. It's like when I go to the doctor's office and I hate going there, this is something they don't really like doing too. Although I always say they like seeing you more than me because you give them money.
Well, you help us make money, so I don't know. I think that there could be an argument there.
I think they like both.
Yeah.
Hopefully they like both. So Janine, if people wanted to learn a little bit more about you or get in touch and find out exactly about the first time home buying experience, or I think you mentioned that you do classes, how can they get some of that information?
They can contact me directly at my website or my cell phone. We lenders are available all the time, much like realtors. We work on the weekend, we work in the evening, just because people are busy during the day. They're working and can't usually talk to us. But we try and make it very easy. And we have options, as I mentioned earlier, face-to-face, or if you like the complete tech route, we've got that. And it's funny because most people like that. They want to start with an online application. They want to upload their documents securely, and then they want the human touch, right? High tech and human touch. So
Yeah, it's important to have both.
Yeah, we find the same. Well, we'll be sure to include all the resources that you mentioned, and any of the contact information in the show notes to the podcast if you want to get a hold of Janine and find out more. But before we let you go, we have a couple of questions for you, and this wasn't part of the prep, so
okay.
hopefully we won't catch you too off guard. But we wanted to try something new by asking all our guests 4 questions.
Okay.
And so the first one, and this hopefully will come easy to you, is can you share with us either the latest book that you read or a favorite book?
Recently, well, it wasn't real recent, but one of my favorite is Lean In. I have been told that that's my management style, which is very complimentary. But yeah,
We have it right there in the bookshelf.
but yeah, that's one of my favorites.
Oh, great.
Oh, I was just going to say, I think that Sheryl Sandberg, she sounds like my older sister when I read her stuff. It's funny.
Really?
Yeah. It just feels like she's my older
She's so
sister.
wise,
Yeah.
wise. Yeah.
Yeah.
The next question is there a favorite movie or a show, Netflix, something you've been streaming lately that you like?
I'm behind the times on my Netflix. We just finished the O.J. Simpson story. That's been out 2 years. And of course, I lived through it, but it was fascinating to watch quote the behind the scenes. It was very fun. Very fun.
I think we're behind on a couple. And it's funny because when that happens, when everybody else has watched it and you're watching it for the first time and you're looking around, either on social media or somebody to kind of share in your enthusiasm because you've discovered this show, even though it was 2 years old.
Yeah.
But someone you want to talk to about the show.
I know.
And they have to remember it. They're like, I know.
I did bring it up at work because I enjoyed it so much. The recent one though is Stranger Things.
Oh, okay.
I love the throwback to that was my era when I grew up. So I love the fashion and not so much the gore of it, but I love the kids in it.
Yeah, well, we're fans of Stranger Things. Our kids are fans of Stranger Things. And the funny thing, and I think that they find this comical, is that the kids in the show are the exact age I was at that time.
Oh, that's fun.
So I think they started when they were like 10 or 11.
Yeah.
I was that age at that time, so it's kind of fun. I know this one might be a tough one for you because I know we've talked about these things in the past, but do you have a favorite vacation destination?
That is a tough one. Italy, I'd have to say. I could go back over and over and over again, and I've been lucky enough to travel often to lots of different places in Italy, but and many other places around the world. So, but that's my go-to. And I'm not even Italian.
I think that might be mine too now.
It's hard to choose, Victor. Choose.
It's tough. I think we should finish off the podcast with some Aperol spritz because we really enjoyed those. And then the last question that I have here is, this and this brings it back to the technology is, do you have a favorite app or an app you couldn't live without?
Couldn't live without Waze.
I was thinking Waze.
Yeah.
I think it'd be the same for me maybe.
It's interesting. We just had that all day internet power outage here in Morgan Hill, and Waze went down, and I talked to 2 or 3 people who could not function, which is a sad statement, right? Nobody has a map anymore in their cars, and so I think that's the one. And I have a GPS in my car, but the interactivity of Waze with police and your neighbors is genius. It's genius. So
it's pretty sharp. And I didn't even think about that especially like you're in the field with realtors and whatnot. And if you don't have Waze and you don't know the area.
Yeah.
Whoa.
Right. On the other hand, when Waze takes you down a wrong street sometimes, you don't like Waze then. But for the most part, it's my favorite.
Yeah, that's funny.
Well, it was very concerning when that happened, when the whole internet, because it was more than the internet, Verizon went down too. So there was no connectivity. And it felt like, I was kidding with the kids and I said, this is what it was like to grow up in the 70s when you had nothing. There's nothing to look up.
Yeah. It was a little weird.
You got to figure it out.
Yeah.
Well, Janine, we've been wanting to have you come speak with us in our studio here. So I'm so glad we had this opportunity. Thank you so much for your time and for enlightening us all.
Well, thanks for the invitation. It's my pleasure. Appreciate the invitation and look forward to talking to you more about home buying.
Yeah. All right. Well, thank you so much.
Oh, you're welcome.
If you have questions, comments, or suggestions for future shows, please send an email to victor@techgirlfinancial.com or join the conversation on Twitter using the hashtag AskTGF. We also encourage you to follow us on the Tech Girl Financial page on Facebook and connect with us on LinkedIn.
Securities offered through registered representatives of Cambridge Investment Research, Inc., a broker-dealer member FINRA, SIPC. Investment advisory services offered through Cambridge Investment Research Advisors, a registered investment advisor. Tech Girl Financial and Cambridge Investment Research, Inc. are not affiliated companies.
Screw